Wedbush analyst Dan Ives raises price target today to 190 on signs of rebounding iPhone demand. There you see him, joins us now. What is the evidence, Mr. Ives, of this rebounding iPhone demand?
Yeah, I mean, our Asia checks this week, which we finished yesterday, they're showing no cuts to production. And that's important because what we're really seeing through there is that demand looks strong out of China. I think a significant uptick, especially post-December. And ASPs, we believe, are close to $900. You put that in right now, they're tracking 3 to 5% ahead of where the street is.
But you use the word yourself, modest, in your characterization of the uptick that you've seen in demand in China. And I'm wondering, is quote-unquote modest uptick, is that enough to make a broad statement about demand overall?
That's a great point, Scott. I think most suppliers were viewing that there was going to be actually downticks, that you're going to see potential cuts. And I think the fact that there's actually been an uptick, specifically in China, I think that continues to be hearts and lungs of what we're seeing on this upgrade cycle. That's what really stands out. And when you trajectory that out, you can now have, call it 6-7 million iPhones that beat for the year, despite what we're seeing, this macro uncertainty. And the ASPs are key. That's really why this continues, in my opinion, to be a Rock of Gibraltar tech stock.
But see, that you mentioned the macro yourself, which I wanted to ask you about. The danger of making a call like this in what is a still very uncertain macro. And I don't think you'd be prepared to make the statement that Apple's recession proof, are you?
Not at all. And I think we've seen it. I think Cook's talked about it, but I do believe that they have steel armor relative to that install base. I mean, that's really the golden install base that they have. And I think factored into what I believe is the services, as well as what we see with iPhone, in my opinion, I think this is one that's going to have upside the next few quarters, despite, what clearly right now is the New York City cab driver is bearish on Apple and broader tech going into, what's clearly a white knuckle environment.
But I mean, the services business we already know is slowing. So is a modest uptick in demand enough to offset any of those concerns, enough that you would want to bump your price target up?
Yeah, and the services business, which we think is worth anywhere between 1.2 to 1.3 trillion, you now have about 120 million new iPhones over the last 15 to 18 months. Services attach rates, I think, is going to be strong there. We're seeing an uptick on App Store, as well as some of the things that are happening internationally. I put it all together right now, relative to where we saw this name even a month ago. I think we're seeing demand tick up. And I think that's important. What really goes into the drumroll iPhone 15 anniversary cycle, which will hit in September.
Is there any regulatory risk that you see at all? DOJ said to be, escalating their scrutiny of the third-party app issue.
Yeah, I think that continues to be headline risk. I mean, obviously the Epic trial, I think that really gave investors a lot of agita. But if I look at it right now, I think bark's worse than bite when it comes to Apple from an antitrust perspective. We spend a lot of time in the Beltway. I think right now the lack of consensus is actually a positive. And that App Store, that's one of the key ingredients in their recipe for success in terms of that attach rates. And I think that's why right now this is really Cook navigating the storm.
We'll leave it there. Dan Ives, thanks so much. We'll talk to you soon.